Hello, accounting students. It's Mrs. Bloomquist, and we are currently working on Chapter 12, which is preparing payroll records. We have worked our way down to Lesson 3 in Chapter 12, which is preparing payroll records. The two objectives of this lesson would be to prepare a payroll register and then to prepare an employee earnings record. So one of the things you want to remember is that we previously talked about time cards and W-4 forms, and that the information that we use to calculate taxes is contained on that W-4 form, but also that the information we use to calculate payroll is actually based off the time card for the employee. So a payroll register as a vocabulary item summarizes earnings, deductions, and net pay for all employees of the company for one pay period. So the register gives us a look at the total payroll picture for one pay period for the company. One of the things that you want to keep in mind as we look at the information on the payroll register is that for the purposes of simplification, the book is not doing anything with regard to state or local taxes. Because state taxes are different all over the United States. Some states have income tax, some do not. Some localities have additional income tax, some do not. So in order to keep the system a bit cleaner in the book, there's no mention of state taxes. However, most of the time, businesses do have to have some kind of state payroll tax information contained in their registers. So here we're looking at a payroll register, and what you can see on here, the date of the pay period. So it says semi-monthly pay period ending in December 15th. The payment date, so employees were paid on the 15th. A list of all of the employees' personal data, so their name, their marital status from their W-4, and the number of allowances they elected. Then you can see their earnings, and their earnings are divided up between their regular pay and their overtime pay, so that we can see how much the company is spending in regular pay and overtime pay. Then federal income tax that's been withheld, Social Security tax, Medicare tax, any money withheld for health insurance deductions, any money withheld for retirement, and finally the total deductions from the paycheck. Last column then looks at the net pay that the employee is receiving. So the one thing that you want to remember is that the total column for earning, that's gross pay, and the pay the employee actually receives after all of the deductions have come out of their check, that's net pay. After you go ahead and fill in all those lines, you would again do the totaling, so proving that our totals are correct, and then ruling with that double line so that we can verify that all the information above the double line is correct. Finally, the last thing that we would want to go ahead and list is the check number that we use to pay the employee. Now, businesses are required on a quarterly and an annual basis to report information to the IRS with regard to employee earnings. And so businesses send in quarterly reports, they send in annual reports, and don't forget they also have to submit the tax withholdings. But they have to, in order to fulfill these report requirements, they keep an employee earning record for each individual employee. So the definition of the employee earning record is a business form that's used to record details of an employee's earnings and deductions, and that would be the employee earning record. Each employee has their own earning record. So you can see that the information from the payroll register then is added to the earning record for the employee on a per payroll basis. So you can see for the entire quarter, there were 2 payrolls in October, 2 payrolls in November, 2 payrolls in December, and we take the information from the December payroll register and put it in the earning record for the quarter. Now, the earning record is generated on the last day of the quarter, So the 31st, we have employees' data, we have the accumulated earnings from prior quarters, and you can see that the information from the December 15th pay period matches the information in the payroll register. After the information is posted, the accumulated earnings is then updated for the employee. Again, at the end of a report, you always want to single line to total, and after you have confirmed, verified, proved all of the totals on the page, that's when you put the double line showing that you proved your totals. All right, so what does the payroll register summarize? And remember, payroll register is what the business uses to record all the information regarding one payroll for the entire business. So it shows the total pay, total withholdings, and then net pay for all employees. How is net pay calculated? Remember that net pay is what the employee actually receives. So it is their gross pay minus all of their deductions. Why do companies complete employee earning records? Businesses are required to send quarterly and annual reports to federal and also state governments showing all of the employees' taxable earning and all the taxes that have been withheld from the employee's pay. So because of those IRS requirements and those state requirements for reporting, businesses keep an employee earnings record. Okay, you can see lesson 3 was pretty short. Go ahead and do the form online and do the work together and on your own, and then you can move on to lesson 4. Good luck.